morning to all, everyone. I am Dr. S Harikaran, Head Department of Commerce, Ratnam College of Arts and Science. I am going to present the banking companies in the subject coming under by higher corporate accounting. So, the banking company's profit and loss account, we have a 16 schedules. From 13 to 16, it's treated as profit and loss account. From 1st to 11, it's an asset and liabilities, like 1st schedule to 5th schedule is liability, and 6th to 11th it is asset, and 12th schedule is condition liabilities. It's treated as conditions we are going to mention there, right? After that, after the 12th schedule, we have a schedule number 13, 14 and 15, 16. Like 13 is interest earned, then 14 is other incomes, then schedule number 15 is interest expenses, then schedule number 16 is operating expenses. Like the schedule number 13 is clearly given here, like interest earned. So we know the banking programs, you know the banking functions. So bankers are primary function is basically doing their getting a deposit and giving the loan. So these two concepts is we know very well, and there is first thing, interest earned. When the bankers are given to the loan to public, they want to return get that loan amount principal and also the interest. That interest here we taken schedule number 13 is interest earned, like interest, then income, first thing 13, then income on investment. The banker is going to investment. So when they are getting a public deposit, after that they are going to invest to the other company shares and invest to other government companies securities, anywhere they are invested. That investment they are getting a income. Then third condition, interest on balance with RBI. So the bankers are getting a profit, they are going to investment where the RBI. And RBI will give a interest to the bank, right? Then other incomes, the other incomes nothing but except this interest, remaining all the incomes treated as other incomes, like commissions. So we know we need to send the money to home. It means I am having an account in our hometown, but I am going to transfer this amount my hometown to other district or other state or other country. So that time I am using to bank. So that bank will change my amount, my account to another account. So that time they are charging. That charging means here the commission, exchange and brokerage value. Then profit on sale of investment. So bankers definitely they are investing or they are deposited anywhere in an investment. That investment will give return any one day profit. That is treated as profit on sale of investment. Then third thing, profit on revaluation of investment. So every year they have to revalue their investment. So how? For example, like they are going to investment in a shares, some like any one core industry. So that time after completing 1 year their investment date, from investment date, they are calculating our shares value is increased or not. So that time they can easily find that investment is getting a profit or loss. In case they are getting a profit, they are showing other incomes. Suppose they are getting a losses, they are showing it's and treated as schedule number 15 expenditures. Then profit on sale of land. The bankers are buying land 10 years before or any time they are buying, and when they are going to on sale, so that time they are calculating that purchase value, and also when they are going to sell, that time the different value is profit on sale of land. Then profit on exchange transactions. So how many transactions they are doing from the customers and also the DD purpose, any one purpose they are getting some income, that calculation is profit on sale of transaction. Then income from dividend, so when they are going to an investment to other companies or shares and debentures, so that time mostly they are getting a dividend. That dividend, when the companies are earned the profit, they are ready to give the dividend to the shareholders. That shareholders work the bankers are doing. And schedule number 15, interest expenses. This is only focusing on, so bankers are collecting amount from a public, so that amount we know very familiar in 4 areas deposited, like savings bank, like current account, like fixed deposit, like recurring deposit. So these 4 areas the bankers should give an interest, right? That interest they treated as an expenses, because they are getting a public amount. So when the bankers are given the loan, they are getting interest. So when the bankers are getting a deposit from the public and also the RBI, that time they want to give an interest to the public and also the RBI. And schedule number 16 is operating expenses. So the bank is not running their own area, so they want to spend some amount day by day expenses, like revenue expenditures and provisions. So what are all area they are going to be expenditures, like rent. So most of the bankers are doing their business in a rental building. So most of the bankers are doing a business in a rental building. There is no own building. So that time the bankers need to give an rent, the building rent. Then tax, lighting, so they are using electricity, they are using water, so that is, and they pay the bankers have to pay the tax. Then salaries, so the banking employees should get a salary from employees, the bankers. So without salary they cannot work, so it's an principle to give an salary to banking employees. Who? The bankers. Then depreciation, so we know the depreciation means the bankers are having fixed assets like furnitures and computer systems. So that is when they are purchased, and after 1 year they are using how long years. So that time after their life, means the furnitures or computer life completing, they have to calculate and depreciation. The depreciations means it's an reducing the value from a purchase, right? Then last law charges. So when they are going to a given loan, that loan, all the loans they cannot get returned, right? Some customers are not given to the properly, so that time they are going to a law, and legally they are going to legally, so that time they meet a law problem. So that time they are going to give a law charges. Then provisions for bad debts. So when the customers are not given the loan, so that loan treated as an bad debts, they cannot recover the loan, that amount, so it's treated as bad debts. So finally we have a 4 schedule discussed. The schedule number 13 and 14 is treated as income. Then schedule number 15 and 16 is expenditures. So we have to calculate our net profit like income minus expenses, like schedule number 13 and 14 we are going to add, then less schedule number 15 and 16 total value. So 14 and 15 is add, 15 and 16 is less, finally we can get net profit. So thank you all, thank you.